Okay, now I'm going to talk to you about risk management. So at this point, please don't fall asleep, okay? Risk management is a necessary evil, in my opinion. We have to be good at it. If we're no good at risk management, we are taking too much risk. The clue is in the name. Now, Point and Figure will provide us with a risk management system. And it's quite simple, very simple. We know where our entry point is. We know our entry point is here, and we know where our stop loss is. So, if we're risking, in this case, an entry is 74.70, our stop is 75.10, we're risking 40 pips. If we're risking 40 pips, what should our target be? Our ideal target must be an 80 pip profit. All right? Now, when you plan your trade, you must take into account where your target is. So, in this case, we have an entry here and a 10, 20, 30 pip risk. At this entry, if we're risking 30, our reward must be 60. And so here's our 10, 20, 30, 40, 50, 60. It's easily achieved, and that's our minimum target. Now, I take risks, and I estimate my risks with a minimum 2-to-1 risk-reward ratio. I will never, ever do a 50-50 trade. One, it's just not worth it. Okay? If I want to do a 50-50 trade, then I pop across the border to Cambodia or go to Las Vegas. That's where you do your red and black trades, okay? Not in Forex. Forex is not gambling. We don't gamble. We're taking calculated risks and we're coming up with double our risk as reward. So, manage your risk. And if you know your maximum drawdown at all times, every time you take a position, then you know how much of your wealth you're risking. And if your positions go right, then hey, the day is really good. And if the things go wrong, well, you knew what your risk was and the day is not so bad. It's all about being in control. And when you're in control of your trading, you're in control of your profits, you're in control of your losses, you are trading effectively. Point and Figure will tell you where to stop. And if it tells you to stop, you better stop. You must listen to the market, not your emotions. You must never listen to your emotions. You just must look at the market, and when the market tells you, sorry, but this time you're wrong, then you just get yourself out of the market and consider your other options. Maybe it's time to go the other direction. Maybe it's not. It's your choice. But whatever you do, stop your position. So one of the more difficult things that we do is that when we set targets, you're not quite sure whether you're going to achieve those targets. Well, Point and Figure will tell you the areas of support and resistance. And what I do, as we look at this chart, is I tell you, I see a buy signal and I will look to take my target somewhere against the previous resistance, which is up here at 110.80. So 110.80 has been support, okay? 1, 2, 3 times. Fourth time down, it got broken. And once it gets broken, support becomes resistance. Yeah, support is resistance. So if we know this is where the sellers are, and we've seen and entered here, we should be looking to take our profits a box below resistance. If we're greedy, we're going to get it into the resistance. But my advice or my ideas is to actually take target ahead of that resistance. Now, 110.80 was an important point. It still probably is an important point because that 110.80, 111 held again this week and pushed us down to 108.60, 80 area. Important points of resistance are like magnets. And I use those areas to take my profits. And if they finally break through, then you re-enter. You re-enter your position. Because if they are resistance, it breaks through, they're going to become support. So we use them. We use them to our advantage. If you want to run your position through these levels, then you're taking a risk. But please take 50% partial profit on your trades. We're traders. We're here to make money. Ensure you walk away with a profit no matter what happens. We saw earlier I did a dollar-yen trade on Monday, and here it is. That was my entry point, 109.37. Okay, I put a stop in 108.90, and I was risking 47 pips, which for me, that's quite a big risk. I don't usually risk quite so much. I'm more of a 25-30 point risk man myself. So if I'm risking 47 pips, I've got to make 94 at least, or in this case 100. So before I do the trade, I look for my target. Can my trade do 100 pips? And I identified an area. Okay, I identified this area here, which was broken, support, become resistance, support, resistance, support, support, broken down. This would be my ideal target area. I identified this area. I saw there's a little bit of resistance at 110.10, but I viewed it as being minor. But 110.30.40 I saw as being some sort of pivot. And that was my ideal target. So I traded and it went to plan and I booked my 100 pips, as you can see. But when you do get a signal, okay, as a buy signal such as we saw, make sure the buy signal comes above support, not just below resistance. So we just flick back to the nice big chart. And I'll show you what I mean. Sorry. And we look at this chart and we see there's a buy signal here. If you enter there, you must be aware you've only got 20 pips. If you enter this buy signal, you've only got 40 pips. They're both valid signals, but they're very close to resistance. But you enter on this buy signal, you've got 100. Okay? So, or 140. So make sure that you don't get too carried away and you enter on these buy signals. It's much better to actually enter when we're closer to support. The support protects you. It may break, but please, I prefer to wait until we've cleared the level to go long. So make sure you know where you are, make sure you know your support and resistance levels, and it makes your trading much easier. So point and figure charts are simple to read. Make sure you see them correctly and don't just see what you want to see. See the resistance, see the support, not just the exciting signals, okay? So enjoy them, use them, but use them wisely and use them as your risk management. Thank you.